Well, I think this is an important moment for the regulators really around the world, as we're seeing, to bring confidence and orderliness back to the system. The reason why we have global SIFI designations is because these companies are recognized to be very important to the global system. As we've seen with Silicon Valley and with Signature, it may not be a kind moment for the securities holders of these companies, but as far as for the confidence in the system, I would anticipate that the regulatory bodies are going to make sure that the system continues to function properly.
Tom, we saw regional banks in the U.S. take it on the chin again today on this news. So how do the regional banks sort of survive this moment? Is it consolidation, regulation, just better supervision?
It's confidence. So remember, we have 4,700 banks in the United States. We have two banks, very big banks, that recently failed and failed suddenly, which I think is a big moment for the marketplace. We have one that just shut down. But by and large, the industry is in very good shape. Clearly, a few management teams did not manage their institutions appropriately through this rate moment. However, the vast majority of the industry is in very good shape. I've probably talked to more bank CEOs in the last week than in any other 1 week in a long time. And I can tell you all is generally pretty quiet, but I can tell you the concern level is still high.
But what does it take
to get to this moment?
What does it take to bring that confidence?
I personally believe it's depositors need to know that their deposits are safe, and that the federal government via the FDIC is going to do what it needs to do to create the liquidity for these regional banks to meet every demand for a deposit. It's the reason why the FDIC was established. A whole banking system is built on confidence, and it's really why we have these agencies.
Yeah, and then, of course, in an age of digital banking where you can do things on your phone, we can see, and we have seen in the past week, just how quickly a situation can reverse and a failure can unfold. That being said, this notion of regulators stepping in to shore up deposits and backstop deposits, how big of a gamble is this? Because, yes, maybe it injects confidence into the system, and it injects confidence from a consumer and from a bank customer standpoint on the one hand. But on the other hand, you're starting to move into nationalization, federalization territory where the American banking system is concerned, or at least the appearance of it, which is something Roger Altman brought up on our air earlier today.
Yeah, so I think it's a couple things. I think, number one, when things calm down, we're going to have a very robust conversation about how the structure of regulation is going to be in the future. And my expectation is the banking industry is going to welcome that, because we want confidence to be high. I think in the near term, what I've heard is that the Fed has been very accommodative for the industry to meet any demands for liquidity in this moment. So we certainly need that and more of that. But I do think if we get to the next gear, my opinion would be to try to use tools that have been used in the past to possibly temporarily put in place better guarantees, more guarantees, to make sure that depositors across the country have confidence. They should have confidence today because the industry is quite sound. But if we get to that extra gear, I think the government should do all it can take in what is becoming, I think, a little bit more of an uncertain economic outlook, just to make sure that the banking system is sound and steady.